Probably the number one most requested stock people have been requesting I go over is ZIM Integrated Shipping, ticker symbol ZIM. Their stock currently offers investors an insane 84.53% dividend yield according to Google Finance. That would probably make this stock the highest yielding investment out there according to these stock platforms. Currently going for a price of $32.06 per share, in the first quarter of this year, ZIM paid a quarterly dividend of $17 per share, which is pretty insane for any kind of dividend paying stock or fund. So I figured this would be a great opportunity to look inside this stock and see if ZIM's a good dividend stock to buy and hold, and can we expect these massive dividend payments going forward. So ZIM Integrated Shipping is an Israeli marine shipping company that provides container shipping and related services in Israel and internationally. It provides door-to-door and port-to-port transportation services for various types of customers, including end users, consolidators, and freight forwarders. The company's been around since 1945, but they didn't become publicly listed on the New York Stock Exchange until 2021. According to their website, they currently have a fleet of 149 vessels with the goal of expanding their fleet further. Their latest investor presentation also highlights their dividend policy, which is the company's plan to distribute 30 to 50% of their annual net income based upon these quarterly results. One reason why dividends are so high, not just for ZIM Integrated, but for a lot of shipping companies, is because the CEOs are paid a large part of their salary in the form of company stock. From what I could find, the CEO of ZIM, which is Eli Glickman, receives roughly 75% of his salary in the form of company equity. So with this kind of payment structure, it's no wonder that ZIM and other shipping companies would want to prioritize high dividend payments because the CEOs are earning a lot of dividends themselves. Which, as long as we, being the individual investors, can also profit from this, then I'm all for it. Going over their financials, we can see this company experienced some massive growth in revenue and net income during 2021. This has mostly been thanks to sky-high shipping fees during the recovery of the COVID pandemic. With consumers going out shopping yet again, this increased the demand for vessels to ship goods from overseas, and along with high fuel prices, jacked up shipping prices, which led to massive profits for a lot of these companies. This was reflected in ZIM's dividend distributions. As you can see, their stock issued a $2 dividend in the third quarter of 2021, a $2.50 dividend in the fourth quarter, and then a huge dividend of $17 per share in the first quarter of this year. But going forward, what can we expect from this stock? Is this 84% dividend yield sustainable going forward, and can we expect more massive dividend payments? First, the whole reason why this stock advertises an 84% dividend yield is all because of that massive dividend of $17. If we look at the entire history of this stock's dividend distributions, we can see it was a one-off situation that so far hasn't happened since then. So this one large payment is completely throwing off the dividend yield that Google, Yahoo Finance, and Seeking Alpha are all reporting on their websites. But now let's look and see what we can expect from this stock in the future, and if there's ever again going to be another massive dividend distribution. The most important thing to keep in mind is that the success of shipping companies depends on the demand for their shipping services. It's pretty obvious, but we need to take a look at the shipping forecast for shipping services. According to CNBC, the demand for shipping has been falling pretty sizably these last few months, as the demand for goods has continued to go down. In China, which is obviously a large shipping country, they're seeing a 60% decline in shipping rates from the highs we experienced last year. The largest culprit for this pessimism is the fear of a global recession. If we are headed for a recession, and it doesn't even have to be a massive one, but if we are headed for more economic slowdowns, then shipping companies like ZIM are going to be very sizably impacted by it. If consumers are spending less money at the store, then manufacturers are going to be slowing down their shipment of goods because people aren't going to be going out and buying as much. This negativity has also been reflecting in ZIM's share price. Their stock reached an all-time high of $91.23 back in March of this year, and so far it's fallen by more than 60% since then. If shipping prices keep falling, then ZIM won't be able to pay out those large $17 per share dividends like they did in the first quarter of this year. When it comes to shipping companies, I tend to treat them a lot like royalty trusts because they function in a very similar manner. Here's some popular ticker symbols for royalty trusts that I see people talk about all the time. The amount of dividends these shipping companies tend to pay largely depends on the demand for shipping services, where with royalty trusts, the amount they pay in shareholders and dividends all depends on the performance of oil. When times are good like they have been, then the stocks have been offering massive dividend yields. But once the demand goes down, then investors should fully expect dividends to be reduced, sometimes pretty significantly. It's for this reason that shipping and royalty trust stocks typically aren't ideal for investors who want to buy and hold for long periods of time. Rather, these stocks tend to perform much better during certain economic conditions. They might be worth holding for a few months or maybe even a couple of years, but they really aren't the kind of companies that you'd want to buy and hold for decades. They're much better for short-term plays in the stock market rather than something you could buy today and then retire on in a couple of decades. We can already see that ZIM has cut their dividend pretty significantly since that $17 per share dividend. But does this mean that ZIM Integrated is a bad company that should be avoided? Not necessarily, as the company is well managed and has competitive advantages that other shipping companies don't have in that region that ZIM operates in. But I will say that your view of the economy should be your driving reason for buying or avoiding this stock. Do you believe we're headed for a recession? Then ZIM probably isn't an ideal company for you to invest in. If you think fears of a recession are overblown and the demand for shipping is going to pick up again, then ZIM would be a good stock worth considering. But for me personally, I'm more of a believer that the economy slowdown is going to continue, and since I prefer to buy and hold stocks for long periods of time, I don't have any plans of buying ZIM myself. We also need to discuss tax for this stock in particular. Because this company is located in Israel, the dividends are going to be subject to higher taxes. According to what I could find, the Israeli government automatically takes out 25% of the dividend distributions at the source. So really that $17 per share dividend back in the first quarter of this year was more like $12.75. But as long as you live in a country that has a tax treaty with Israel, you can actually reclaim the difference, but it might take some extra work on your part depending on which country you live in. In the US, you would have to claim foreign tax credit on your income taxes. With these facts in mind, I think it's clear that ZIM can be a good stock to hold, but only during certain economic cycles. If you look at the stock's share price performance, we can see that it's actually down a lot this year, roughly 43.52% for 2022. Compared to its high in March of this year, it's actually fallen by 63%. Like I said, I think ZIM is still a good company, but I'm personally not interested because of how much the dividends tend to swing. I personally don't think it's a good stock to buy and hold for years with the hopes of retiring on. The performance of this stock and its dividends all depend on how well shipping demand is going to be going forward. So if you think you're pretty good at forecasting that and you think good economic times are ahead in the future, then hey, this stock might be worth considering for you. But these are just things that I think all investors should keep in mind in my opinion.